So, can you use multiple lines of credit to do the velocity banking strategy? Okay, that is a fantastic question that came in from one of our subscribers, and we are going to answer it in today's training. Hey everyone, it's Mike Adams, and on this channel we empower individuals to achieve freedom through improved financial literacy and business ownership. If you are new to the channel, make sure to click subscribe and click the bell so that way you get notified on any and all of our future training. So in today's video, guys, we're going to be discussing and answering the question of, can you use multiple lines of credit to do the velocity banking strategy? And in short, okay, the answer is yes. Okay, you certainly can use more than one line of credit to do this. But that does, just to give you some warning, the bottom line is that does add an extra step of complexity, right? For many, that are new to this strategy, it's like, okay, this is kind of a whole new thing for me. And so, if you're not intimidated to add an extra step of complexity to your velocity banking strategy, you can absolutely use more than one line of credit. So let's say, you're in a situation where you have really good credit and you have multiple 0% interest offers. Typically with somebody, I would say, okay, well, why don't we just pick the best one, okay, and we're going to use that as your new checking account, right, where it's replacing parking the money at the bank, you're parking it in the line of credit. We're going to use one of them, we're going to start making that chunk, and then pay it down, make another chunk, pay it down, and then once the 0% interest ends, go ahead and move to one of those other lines of credit and take advantage of the 0% interest offer. And again, if we're talking, 12, 15 months, again, is that offer still going to be there with the other lines of credit? And typically the answer is yes. Okay, doing velocity banking, you're not applying for new credit, right when you make that chunk, okay? So, obviously we know that your credit score can fluctuate during the velocity banking process. But as you're paying down those chunks, and again, you're leaving those other credit cards on the shelf, not using them, your utilization ratio is staying, for the most part, pretty low. You're not maxing out all of your cards here and doing that. So typically you can just roll from one 0% interest offer to the next one on a different line of credit. Use that for the time period allotted and then roll to the next one or back to the first line. And you can kind of play that game a little bit. But can you use multiple cards all at once? Like again, let's say you got 3 offers, they're all giving you 0%. Let's say, okay, that they're all giving you either low to no fee, okay, 0 to 3% on a balance transfer fee to use those checks. And you're like, Mike, I don't really have a ton of debt here, okay, and I really want to take a slash out of my mortgage or take a slash out of my student loan, and I have all these offers. Can I take advantage of all 3 of them? And so what you would want to do, first and foremost, is you'd want to designate which one of those cards is going to be your main debt tool, your main velocity line. And this is going to be the line that you're running all of your expenses through, the one that's actually taking the place of your checking account. This is going to be the one that you're parking your income in instead of leaving it at the bank, okay? So designate which one is going to be that line, okay? Go ahead and you can make a chunk there. Now, let's say you have 2 other lines of credit, okay? Let's say you have, 2 other $15,000 lines of credit, let's just say, and you want to, and you get 0% interest. Okay, maybe it's a 2% fee, 2.5% if you're using Plastique, something like that, but let's call it 2.5%, and you chunk, 10,000 on each of them, you're going to pay 250 worth of fee, right? But again, you're taking 20 grand of amortized loan principal and bringing it over to that line. So you're taking that loan and dropping it down, okay? And think about all those payments, for the principal that you're at, level that you're at right now, bringing it down that extra 20 grand, you're able to skip over a lot of time in that loan, a lot of payments, a lot of interest. So even though we're paying a little bit of a fee, potentially, okay, again, you could get 0 fee offers with these lines, but let's say again, 2.5%, I mean, that $500, that's going to save you, you're probably going to save way more than that in interest, and especially if we're talking about a mortgage, especially a new mortgage, okay, where you're at the front end of that loan. And all you would simply do is you would treat those 2 lines of credit, and obviously those are going to have a payment, so you would just take those payments and make those using your main velocity line, the one that's actually, quote unquote, becoming your new checking account. All your income would go into that main line of credit, okay, to knock down the balance, and you'd pay all of your expenses on that line. you would pay the credit card payment on the other two lines using that particular card. Okay, so you're running these two, card 2 and card 3, their payment is being made by card 1. Okay, and you're going to keep chunking it down, okay, until this line of credit is down to 0. Once that line of credit is down to 0, you have a choice to make, okay? And again, this is where, again, you're adding a layer of complexity to your velocity banking strategy, because you need to look at, how much 0% interest time do you have left? So we're able to pay down card 1 down to 0. Is that the line that has the longest remaining amount of time at 0% interest? If so, then what you'd want to do is grab the whichever card 2 or 3, whichever one has the least amount of time left, you'd want to grab that balance and bring that up to that first line, okay, or the one that has the most remaining time at 0% interest. Essentially, the one that has the most time remaining, okay, is going to become that new debt tool, and that's the one that you're going to start running everything through. And so again, you'd want to pay attention to that. Which one has the longest time frame here of 0% interest? And so again, let's say we're sticking and staying with line number 1. That one gave you 18 months. These other two had, let's say, 12 months each at 0% interest. So what you do is, after you've chunked this down, okay, you would take the balance off one of these other two lines and bring it right up to that main line. And then you would again rinse and repeat the velocity banking strategy. All your income's going in. You're making the payment on card number 2 using card number 1. Okay, you're making all your other payments using card number 1 there. And you're going to continue to chunk that down or sweep it down. All of your income going into the line, all of your expenses going on the line. And again, that debt's going to go down by your positive cash flow number, because again, that line is charging you 0 interest. Okay. And then again, once that is paid down to 0, okay, you're going to take that chunk and again, take a look at which one's still giving you more 0% interest time. If that one, if you've still got time on that first line, you would just then take the balance from line number 2 or 3, whichever one we grab, whichever one is left, and you would take that balance and bring that up to the main line. And then from there, you would sweep that line down. And so what's cool about that is, again, let's say we've done this now over the course of 18 months. Instead of just making one chunk, okay, on day 1 of let's say 10,000 on that first line of credit, you're able to pay it down, okay, let's say in 6 months, and then you could certainly grab another chunk. But by making 3 chunks all at the same time, you're driving down that principal balance. When you drive down that principal balance on your loan, the next day when you make your payment, more of that payment is going to actually hit the principal on that loan. So you're actually digging a little bit deeper into that loan by using multiple lines. But again, the main drawback to that, and again, hopefully you followed everything as I went through the explanation there, the main drawback of using multiple lines of credit is you're just simply adding an extra layer of complexity to your velocity banking system and to your strategy. You're gonna have to pay even more attention to the time frames that you have left there, okay? So this would be only something that I would recommend for those that are the most disciplined. Obviously, this strategy in and of itself takes a lot of discipline. You need to stay very, very consistent, but it's gonna take that extra level of paying attention to those numbers, paying attention to those time frames to make sure that you're kind of using these multiple cards in the right way, paying them off in the right order, okay, to where you don't have a big balance sitting on there when the 0% interest time runs out, okay? So you're gonna wanna pay attention to that. But in short, can you use multiple lines of credit to do velocity banking? The answer is yes. Can it be very, very effective as far as driving down that loan balance? That way, any future payments, more of the payments affecting the loan. Okay, so you're saving much more in interest by doing so. Yes. Okay, you can definitely do it. But again, you just have to be extra diligent and pay extra attention to your 0% interest timeframes and make sure you pay off those lines accordingly. So hopefully you guys found value in this training and in this walkthrough. Again, this question came from one of our subscribers. And if you see in the comments, whenever you ask me a question, if it's something that I see multiple times, you'll typically see me type in there, hey, I'm gonna add that to my video creation list. And this was one of those videos that got added to that video creation list. So it's a real thing. So again, as you guys have your questions about velocity banking, or about anything that we're discussing on this channel, whether it's all this stuff that's going on right now about the Federal Reserve and these rate cuts, okay, whether it's about credit or about cash value insurance, whatever, all the different topics that we talk about on this channel. If you have questions, make sure to get those in the comments, because if we see them multiple times here, I will create a piece of content to answer that question. So again, hopefully you guys found value here. If you did, make sure to give this video a like and give it a comment below, and I will see you in the next video.